I grew up in Birmingham. My dad was a businessman. We had to bring something of benefit to the company, whether by training or education or some sort of expertise. 3 or 4 years into this investment, the accountants came to him and said, something's not right. And they began to look into this more. And they found out the owner of the company had been doctoring the books, had been embezzling funds.
So talk about how that, said you were a cash guy, we would say, like you had decided, like, I don't want to have any debt, I want to only use cash.
I never was very comfortable with the stock market as a place to invest or make money. I was more comfortable with real estate. I don't like having to pay taxes. I don't know if it's appropriate to say that. I struggle with my attitude about, paying taxes. Many people in Washington are working to lower my tax bracket, but they haven't done it yet.
Welcome to the Save Yourself podcast, brought to you by Unlimit Wealth. So today we've got a guest with us, Dr. Lev Bragg. I'm here with Jordan Cole. Jordan, how you doing?
Great, man. Excited to be back.
Lev, how are you today?
I am doing super.
Good. Well, we wanted to have Lev come by and visit with us for all of you to hear. Lev's a longtime friend and one of the wisest people I know. Has a bit of a Renaissance man, I think. Has been involved in a lot of things and mostly successful things, and we're just hoping that he can share some of his wisdom with us today. Lev, when we get started, why don't you just tell us a little bit about kind of you, your background, upbringing, early career, how that's evolved to this point, and we'll take it from there.
Well, thank you, Brad. It's great to be here with you. I grew up in Birmingham. My dad was a businessman. He spent much of his career working in a real estate company that was actually started by my great-grandfather. And so we have a long history of real estate in our family. But it was pointed out to me and to my siblings from an early age that just being a member of our family was not going to be enough to get us a job in this real estate company, that we had to bring something of benefit to the company, whether by training or education or some sort of expertise. It didn't take long in my high school career for me to realize that I was not very good with numbers. And I just couldn't think of anything I was going to do that would be of any help to anybody in any sort of business. And so I was better at science. I went to college and majored in biology and ended up in med school, became an ear, nose, and throat physician, practiced as a physician in Birmingham for 30 years. I thoroughly enjoyed my medical practice. I've been retired for 6 years, and I thoroughly enjoy being retired. I'm married to Vicki. We have 3 adult children and 7 grandchildren. So that's how I spend a lot of my time now as a retired physician.
Love it. And so, so physician, what was you felt like you were good at science. Was that just the motivation that that wanted to lead you down the medical doctor route, or was there something else that kind of struck a fire in you with that?
My dad had a dear friend who was a surgeon in Birmingham, and their friendship started as they both shared a love of quail hunting. And so I was around this physician really all of my growing up life. And he was just one of those folks that whatever he did, he enjoyed doing it. And if he was working, he worked hard, but he had a good time. If he was playing, he had a good time doing that. And so I had the opportunity to spend some time in his office, and actually in those days he let me go into the operating room with him. And for a high school kid, seeing surgery was just really, really exciting and fun, and helped me decide, hey, I'd like to do that.
That's interesting. I don't know that I knew exactly that part of the story.
Yeah.
Love that. So you mentioned your dad, Lev, and him, and starting with, was your granddad or your great granddad?
My great grandfather started the real estate company.
Okay.
My grandfather was in it, and then my dad.
Okay. And so how did you get through medical school, you come out, you're a practicing physician, ear, nose, and throat doctor. Talk about how your dad and his business and being in real estate influenced maybe some other things that you did financially or career wise, in parallel while you were still a practicing physician.
Wow. Brad, Dad worked really, really hard. He was gone a lot, and I didn't really know a lot about what he did, but he had an experience where I guess I was finishing up my surgery residency, about to start in my practice. And Dad had invested in a company. He loved investing in people, and he helped a gentleman start a company. The company was doing well. Dad brought some of his friends in and allowed them to invest in the company. And 3 or 4 years into this investment, the accountants came to him and said, something's not right. And they began to look into this more, and they found out that the owner of the company had been doctoring the books, had been embezzling funds, and they lost a lot of money. And Dad really spent the last 15 years of his life paying back loans that he took out to cover the money he had lost and the money that his friends had lost as a result of his recommendations. And so when my dad died, he really thought he was close to bankrupt. And it left a significant impression on me, in that in the real estate business, Dad had borrowed a good bit of money and utilized banks as a source of capital for his investments. And it just really raised a red flag for me that I didn't want to put myself in that position. And I was tremendously proud of my dad for the way he responded to that, the way he rejected bankruptcy, and that may be the best option for some, but Dad didn't want to do that. And he just spent the last 15 years of his life working to get out of this very, very deep hole. And it left an impression on me that I would like to avoid getting in that hole in the first place if I could. So,
Dr. Bragg, I was going to ask, with that experience and as you led into your young adult life, getting into medicine, and then ultimately starting into practice, did that shape the relationship that you had with money at that point in your life, and how has that changed over time?
It did, again, just leave the impression that I didn't like debt, and I wanted to avoid debt as much as possible. And early in early in my marriage, early in my medical practice, we had financial planners that were kind of coming out of the woodwork to talk to us about, let us do a financial plan for you. And we allowed a couple of those to take place, only to find that whatever it was, whatever their product they were selling was exactly what they felt like we needed. And so we weren't terribly comfortable with that. My wife heard about someone just listening to Christian radio, and we engaged them, and basically their recommendation to us was first to get out of debt. And that resonated with me from Dad's experience. It made sense. They could point out passages in scriptures where it would say, be careful with debt. So that was probably something that we, just a foundational principle that we adopted early on.
So, Lev, you and I met through church first, and started developing a relationship. And remember, we met for lunch one day. This, I think, would have been maybe a decade ago, 10, 11 years ago. And I gave you Mr. Nash's book, Becoming Your Own Banker. And based on everything you've just told us about being averse to debt, things you'd heard from financial planners, tell me about what your first impression was when you read that book, and as we first started talking about, you know, what is infinite banking? What does this mean? What's he trying to communicate here? What were your first impressions?
Well, I very well remember our first meeting, Brad, and we enjoyed talking about our families. We had common interest in hunting and fishing and golf, and toward the end of our time together, you gave me a copy of the book, and I agreed to read it. You asked me to let you know what I thought about it when I finished. I was, you didn't have to read very far before you realized that, okay, this is a guy who is advocating using whole life insurance as a tool for your financial portfolio. And I guess I had heard at some point the adage that folks in my position needed to buy term insurance and take the money that they saved buying term and invest it. So I have to confess, when I read the book, I skimmed it the first time thinking I could just read through it quickly and find the flaw in Mr. Nash's argument, and then I'd be done with it and I could move on to other things. And I got to the end and I didn't find the flaw. And so I went back and read it more carefully, and was just really impressed with his ideas. It caused me to rethink some of the things I thought I knew, and led us to where we just believed this was something we needed to take advantage of in our financial portfolio.
How would that, and kind of knowing what, you know, as Mr. Nash lays out in the book, and also he's talking about whole life insurance and structuring it specifically for cash, and, you know, ultimately you're going to use the life insurance company's money and leverage against the cash in your policy to do whatever it is, whether it's a piece of real estate or you know, expand a business, whatever you're going to do. So talk about how that, you said you were a cash guy, we would say, like you had decided, like, I don't want to have any debt, I want to only use cash. How did you process through that when kind of reading about, knowing like, hey, this is my money, but I'm borrowing the insurance company's money, and my money's a collateral? How did you think through that?
Well, I like I said, I'm not very good with numbers, and so I count on people like you to help me think through that. But I never was very comfortable with the stock market as a place to invest or make money. I felt like there were a lot of people that knew a lot more about the stock market than I did. And the people that knew more about it were sitting there waiting on less informed investors like me to get into the stock market, and they were going to make money off of the mistakes that I made. And so that just looked like a game I wasn't very comfortable playing. I was more comfortable with real estate, but obviously the problem with real estate is you need larger amounts of money to get in the game. And so it was harder to come up with money. I didn't feel comfortable borrowing money to invest and try to make money. And so the utilizing the insurance company's money made sense as a source of money where I could continue to earn some income on the money, even though I was investing it in a different place.
Love that.
That made sense.
Well, you know what you said something key there. You said a minute ago of early in your career having financials advisors, wealth managers, whoever, maybe some insurance people, lined up out the door for the fresh doctors right out of medical school of, let me tell you what you need to do with your money, which is give it to me, and I'll tell you where to put it. It's okay. I understand it. You don't need to worry about it. We'll revisit it in a decade or two or three. You got some sound advice early and were smart enough to know, well, I don't really understand that. I don't know if I want to put my money to work somewhere where I don't really understand it. And you just laid it out again, which is why we would encourage everybody, and I've encouraged you, we can't do anything for any of our clients that's going to compare to the return they could get if they put their money to work with things that they know and understand. Obviously, you're a physician, clearly knew and understand that world very well, but you also had an understanding of real estate, as you'd learned from your dad and other associates of his. So talk to us about maybe some opportunities you've taken advantage of since you started doing infinite banking, and kind of how you've used that, put those resources to work in other areas.
Both my dad and associates of his that he brought into the company to work with him were very, they were frequently going to the banks to borrow money to purchase real estate. And just getting to the point where we had where I had some cash in the insurance policies kept me from having to go to the banks to borrow money. I could get it from the policies if there was something I wanted to invest in. And we have also actually, depending on interest rates and so forth, we have used cash that I had in insurance policies to fund the purchase of properties for some of the other investors, so that I could provide the cash. We could get it more quickly, less paperwork, and then they would pay interest back to my policy.
Yeah.
So,
Dr. Bragg, when you first started with using infinite banking as a tool, did the expectations of what the utility of the policy would be, did that come to fruition, or did it seem, really, really great, and it really kind of ended up being a moderately useful tool, or was it maybe the opposite or somewhere in the middle? Did it kind of match that level of expectation that the tool could be something that could be fully taken advantage of and deliver on the value once you actually finish Nelson Nash's book?
Jordan, I think that it has having money in the policies has been very comforting to me and to my wife. My wife enjoys just knowing that that's there. Now, that's probably all she knows about it. That's all she really wants to know about it.
That's fine, yeah.
But she knows Brad's number, and he knows how to find that pool of money. So there's some comfort there. I do not feel that I am one of the infinite banking users who maximizes the use of infinite banking. but I think that's primarily because I'm really no longer in the investment game. You know, I'm not just looking for the next deal. I'm not really looking to see how can I make more money. And so I'm sure that it's an underutilized tool for me. But where we are utilizing it now is having that. We have recently done some estate planning and have updated our wills and so forth. And so we are using the insurance policies as the funding for inheritance that we want to provide for our children. And I don't know if our children will ever listen to this, but in case they do, there's not going to be a huge inheritance, but it will come from the insurance policies. And it doesn't matter what the politicians do with the state laws and how those rules change and so forth. This is separate from that. And then it allows us then the freedom to make plans with our with the remainder of our estate for charitable giving that we want to do. So there's some peace of mind and comfort in planning in terms of the next generation. We're also beginning to think through and about to proceed with purchasing insurance policies for our grandchildren, and to provide money that their parents would have access. You know, whether they need braces, whether they're looking to get a car, whether they're utilizing it for education. But having these policies at least opens the door for my wife and I to continue to have conversations about money with our children and grandchildren. Mm-hmm. And so I think there is, it keeps the dialogue open, and it continues to give us opportunity to share our worldview, our understanding of the purpose of money and the ultimate best use of money with our children and grandchildren, when otherwise we might not have that opportunity.
Well, you said a mouthful right there, Lev. That was I'm gonna try to go back to the beginning of that, and I'm gonna leave some out. Jordan, be paying attention to what I leave out here. But the first thing that you said that really caught my ear was talking about how this has enabled you and Vicki to charitably give at least differently, maybe more efficiently, really both while you're here and then upon your passing than you would have otherwise. And one of those ways would be, you know, any qualified money that is out there upon your passing, you know, if that would go to children, you know, they're going to have to pay a tax on that at whatever tax bracket they happen to be at that time in the future, right? So there's going to be not 100 cents on the dollar that's going to get transferred over of that if you were to give that to your children. We can transfer 100 cents on the dollar of the death benefit to your children, but then it enables you to charitably give those IRA dollars, those qualified dollars, at 100 cents on a dollar if it's given to a charity. So it really maximizes, you know, generational impact, not just for your family, but for other charities to benefit things that are important to you on down the line. And then when you talk about the policies on grandchildren, you know, you mentioned your great-granddad starting a real estate company, and we've sat here in 2023. I don't have any idea what year your great-granddad was born. What year was that? Do you know? Have any idea?
He started the company in 1908. I do know that.
So, I mean, he had to born in 18-something, yeah. Right? You know, so 125 years plus ago. But we're talking about him right now and the generational impact he's had for his family, at a minimum with knowledge, right? And then financially also from having started that. In my mind, I picture your great-grandchildren. I don't know if podcasting will be a thing however long that is in the future, having these same kind of conversations about you because of, you know, policies on your grandchildren that your children own that will be then owned by your grandchildren upon your children's passing, but the death benefit ultimately goes to your great-grandchildren with the legacy that you've started. And really the legacy you're leaving is in, wisdom and understanding and how to think. The money's great and it's just a tool, but with the coaching that you'll give them, I can only imagine what those conversations will be like, a century from now with your great-grandchildren.
I wish I was smart enough to say it as well as you did, but that's what I meant. Yeah. So thank you.
Yeah, but I'm assuming you probably, when you did pick up Mr. Nash's book, and this is one of his, main convictions, core convictions, was to talk about the generational legacy that one could leave with this system, not just financially, but as Brad said, knowledge. I'm assuming that's probably something you didn't anticipate stumbling upon in a financial book.
Absolutely. I thought he did a great job of conveying that. I didn't understand at the time, but parenting adult children is more difficult than I thought it would be. And
now, that's not good for me to hear. I got a 6-year-old and a 2-year-old, and I think this is hard as it is.
They pay a lot of attention to you now, and a day is coming when they will pay less attention to you. And so we just really value opportunities that we have to speak into their lives. Mm-hmm. And when it's ideal when they invite us to speak into their lives, and if we have an insurance policy that they have some vested interest in, they are more willing to listen as we speak into their lives. Mm. So that's something we appreciate.
Well, that's a good word. And you just articulated that better than I could have. So we traded off there with that.
So to wrap that, put a bow on that. Any advice for parents that are entering into that phase? If you could go back and say, "Man, I wish I would have done this more, or had more opportunities to engage with them in this way when they were in that stage of life, that they were, a lending ear to you on a more readily available time frame." What would you do? Would you change anything?
Our youngest daughter was she was actually in grad school, but she was still living at home when Brad and I first connected. And as I came to understand infinite banking a little bit better, I'm sure we had some dinner time conversations about it. And of our 3 children, she is the only one who owns an insurance policy. And so we continue to have conversations, and we have she has used that policy to help them purchase a home. They have purchased a car with money from that policy, and I think they are making very sound, solid financial decisions. And so, would my 2 older children have viewed money a little bit differently if I had known about infinite banking before? I don't know for sure, but I wish that had been the case.
Mm-hmm. Mm-hmm. Well, before we wrap up, Lev, is there anything we kind of covered a lot? Is there anything that you'd want to add or offer relative to infinite banking or your investing career, anything that we hadn't talked about since we've been here?
I don't know, Brad. I don't know what's appropriate to say, but one of the things I've just noticed is that I don't like having to pay taxes. I don't know if it's appropriate to say that, but
I don't know if anybody does it with joy, really.
I struggle with my attitude about paying taxes and feeling like I'm not sure they're really going to use that money more wisely than I would have. And so I was particularly intrigued as Mr. Nash talked about all sorts of deferred plans and tax deferred plans. And just the fact that I bought into the IRA 401k idea that when I retire, I would be in a lower tax bracket, and if I took the money out, then it would be advantageous. And I never considered that I was really making a deal with the government and was going to allow them to tell me 30 years later, this is how much we want you to pay on that money when you take it out. And so I would have done my retirement planning differently if I had known about infinite banking years earlier, and I would have utilized whatever my employer was matching, but that's all I would have done in terms of tax deferred accounts.
So you're telling me that you're not in a lower tax bracket today than you were 20 years ago?
I'm sure many people in Washington are working to lower my tax bracket, but they haven't done it yet. And, so
that's so good.
You put all of that very diplomatically. I must give you some kudos on that.
That's one thing that Lev's one of the greatest diplomats I know. Well, Lev, thank you for your time. This has been just really great. I always enjoy talking to you. And as we wrap up, let's part with our parting question. If you could, God, I lost my train of thought. Say it, Jordan. Ask the question.
Yeah. So one of the things we like to just to end a session with any of our guests, just to get a barometer of their perspective on life is, if you could define success personally, how would you do that? How would you define success? And then, just to kind of have an idea of how that may have changed, what would that have been 10, 20, 30 years ago, just from a matter of comparison?
Well, Brad, Jordan, that's a really interesting question. And I can remember reading a book when I was a kid, maybe a teenager, where basketball coach John Wooden, and he defined success as the peace of mind that results from knowing that you have done your best to become the best you can be. And I took that to heart. And to me, that meant working hard, studying hard, trying hard, always doing my best. After a couple of false starts in college, I got serious about studying. I got into med school. Med school was hard for me. I felt like I had to study harder than other people, but I worked at it. I ended up getting a surgery residency. I finished that. I got a good job. I worked at a good hospital and great colleagues and friends, and I had a great wife. We had 3 great kids. I had gotten to the point where I was exactly where I had hoped to be. And I didn't have that peace of mind that Coach Wooden had promised that I was going to have. And I was troubled by it. And I was thinking, is this all there is? What did I miss? And I even considered, am I in the wrong profession? Where did I take a wrong turn? Vicki and some trusted friends and advisors helped me realize that my view of success was a little bit off, that I had a very, what they called, egocentric view of success. And I felt like, well, I'm embarrassed to say it, but much of my life just revolved around me. And did I Was I working hard? Was I making money? Was I climbing the ladder? Was I achieving the goals that I set? Was I being happy? And over a period of time, I came to realize that the peace of mind that I was looking for really wasn't to be found in those things. And instead, that this peace of mind can only come from being rightly related to our God, to the Creator. And I had known about God. I had known about His Son, Jesus. I believed in God. I believed in Jesus. But I had to acknowledge that at that point, God was just a part of my life, and probably a small part of my life. And after being challenged to read the Word, to study, to learn about the character of God, I came to realize that God is my life, and that the peace of mind comes from bringing my life and my plans and my goals under the umbrella of His plan for my life. And so realizing that, I had the approach, or Vicki and I would struggle with how much of our money should we give to God. And then we got to the point where we saw that God was the creator. He was the owner. It was His money, and He let us handle or manage part of it. And the question became, how much of God's money did we need to use to live on so we could invest the rest of His money the way He wanted it used? And as we came to understand that better, and we don't do it perfectly, but there's joy, there's happiness, there's peace of mind that's associated with that was not present when we were trying to do it our way. So I don't know if that makes sense, but that's what success looks like for us now.
Awesome. Knocked it out of the park.
That's
like
fantastic.
You always do. Yeah. Well, thank you for joining us. I'm Brad Lowe for Jordan Cole and Dr. Lev Bragg. Hope you join us again on the Save Yourself podcast, brought to you by Unlimit Wealth.